It's time now for our 360 round to take a closer look at CoreWeave. CoreWeave trading lower today after posting mixed fourth quarter results and issuing guidance that came in below estimates. Joining us to take a closer look, Meghan Joyce, the co-founder and CEO at Duckbill, and Logan Gilland, analyst at Jewel Financial. Thank you so much for being with us. Meghan, I see you're at the nice seat today. I didn't know you were joining us from the floor. Thank you for doing that. So let's start with you then. We saw this 110% revenue growth from CoreWeave, but we're seeing the stock down almost 20%. What is that saying to you about what the market feels about AI names right now?
Well, really, I think this represents anything you need to know about AI investing right now. Investors have gotten wise to the fact that AI companies can grow quickly and are now looking for sustainability. And that's the big question here. CoreWeave is teed up to spend $30 to $35 billion in CapEx on top of a $21 billion debt load, and they're not even profitable. Now, the bull case is the fact that they have nearly $67 billion of take-or-pay contracts teed up for the next year, and that's a more secure pipeline than most. But the bear case is that they have to build out all that capacity where they've already started to stumble. And so investors are really taking the show me path and waiting and seeing how that'll all materialize.
Yeah, it's certainly not the first time we've heard about the need for the show me path. So, Logan, coming to you, speaking specifically just to CoreWeave here, is this move we're seeing simply a guidance miss, or are we watching a broader re-rating of the AI infrastructure trade happening and CoreWeave's just caught up in it?
Yeah, I mean, I think it's a little bit of both. I think you have a company that's missing on the forward guidance, so that's going to be hit regardless of the environment that you're in. But obviously, this environment, just like the other guest said, is going to be one that names are going to get punished if they're associated with AI. Obviously, CoreWeave has had a really good run, but now the stock is looking about 50% lower than what it was at all-time highs back in June of last year. So it's getting punished with everything else, but at the same time, you're still missing that forward guidance. So again, you're going to have to prove it as a company. If I go to a Michelin star restaurant, which I think a lot of the pricing that the market has done in these AI names has been Michelin star, they're expecting perfection. If you're not giving perfection, the stock's going to get hit significantly.
And we're certainly seeing that today here with this move to the downside. Meghan, you cited the bull case here in your notes that you sent over is the $66.8 billion backlog. But my question for you is, how confident should investors really be that CoreWeave can actually deliver that capacity on time?
I mean, this is the big question. Microsoft and OpenAI would not be signing these take-or-pay contracts that really does commit them to those payments without confidence that they're going to use the capacity. But already CoreWeave has run into trouble with actually delivering that capacity on time, and this is the subject of multiple lawsuits. And so the big question here is whether they can deliver on that, and then how that translates into returns or lack of returns for investors.
And Logan, looking at the price right now and the reaction that we saw, you noted that we're now roughly at half of its all-time highs for CoreWeave with some of those negative headlines and then this move to the downside today. Is that, from your viewpoint, already reflecting a necessary reset in expectations here? What are your thoughts on where price action might go?
Yeah, I think we could see some additional downward pressure on a name like this, just like we have in NVIDIA that had really blockbuster earnings and then sold off throughout the day yesterday. One of these names, like a CoreWeave, that didn't quite hit those numbers, I think you could see additional downward pressure. Now, a company like this, if they can perform, if they can turn their loss into a gain on earnings, you could see some traction that could hit in this name, but we're not touching it right now. I wouldn't buy into the blood here today or buy into a falling knife, because it's a company that really still has to prove it, still has to prove that they can deliver on a lot of the expectations that these mega corporations have with the deals that they've put in place.
And Meghan, how much of the reaction that we're seeing do you think is company specific to CoreWeave versus it just being a part of the broader AI trade cooling off?
I absolutely think that this is about the uncertainty around AI and how quickly we will see the promise of AI productivity and efficacy translate into returns for companies and investors. One thing is clear. There is huge enthusiasm and investment going into AI. But if you ask most enterprises, most consumers, they'll all tell you that the road to actually getting the benefit from AI has been much slower than the build out from companies like CoreWeave. And I think that's the big question. How long will it take us all to get through this messy middle such that other enterprises, the rest of the market, the rest of society starts actually feeling the positive effects, because that's what's really going to deliver on the long-term gains and returns that we see from these infrastructure companies.
And to get through this messy middle, we're seeing all of this spending here. But Logan, I'll ask you, the company says that customers are, I think they use the word desperate for capacity. Does that justify the aggressive spending we're seeing?
Yeah, I mean, to a degree, I think you have to be first. And that's what a lot of folks are fighting for right now, is being first in the space and being the ultimate leader. And CoreWeave is trying to lead that cloud infrastructure space. So the spend obviously is what the market has been concerned about over the last couple of weeks, regardless of the company. So seeing that actually translate into revenues is going to be the ultimate goal. But I think the race to be first is a valid one for these companies, but it also means the volatility that you're going to see if for some reason the market sniffs out, hey, this company might not be first, or they might not be the winner or the new leader in the space when it comes to cloud infrastructure for CoreWeave or AI in general for some of these other names.
And Meghan, if we see this race continue with demand staying strong, but these capital costs remaining elevated as everybody's trying to race to be first, who ultimately captures the economics? Who's the winners here? Is it the chip makers? Is it the cloud layer? Is it somebody else?
I honestly think this is the trillion-dollar question. The race remains open around who will win in infrastructure, and is that a single player or a multiple player? Who will win at the frontier model, and how big is the profit pool available to them? And then ultimately, the biggest untapped opportunity is around companies who are able to translate AI into real-world impact. That's where my company, Duckbill, is exclusively focused, taking AI and translating it into offline actions and benefits for real people. If you talk to the average bank leader or hospital owner or administrator, they're really struggling to understand how AI is going to manifest itself in real benefits and real savings for their enterprises. And the number of companies that are actually focused on this area, like Duckbill, are few and far between.
And Logan, we're a little tight on time, but I've got one final question for you. If we're having this conversation a year from now, is CoreWeave viewed as an AI winner in the AI build out, or is CoreWeave a cautionary tale on capital intensity?
Whew, that's a tough one. I wish I knew the exact answer for you. I'd say at this stage, I think it's one that could struggle from a initial, hey, everybody's excited about this name. I think if we look and fast forward a year from now, obviously everything is moving very, very fast. But it's not one that we're playing with the expectation of it being significantly higher next year.
All right. Well, today significantly lower, down about 20%. But I want to thank both of you for being with us to break down CoreWeave's earnings and how it fits into this broader AI trade. Meghan Joyce, the co-founder and CEO at Duckbill, and Logan Gilland, analyst over at Jewel Financial.